Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Wednesday, January 28th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So looking at some overnight headlines, the impact on the markets, and a rundown on the precious metals. Some housekeeping. If you're in that February gold contract, you're going to want to roll that over to April today, as April is the front month and the first notice date will quickly approach on that February contract. So one thing that I've been trying to do, if you talk to me closely as a client or as a friend, I had been trying to offload some silver because of this incredible run up here. And many of you out there are stackers in the silver market, and I completely respect that. The reality is that you buy these different things here, and how do you monetize it? And I wanted to just go through the process here to see how the monetization would take effect here. And it was quite discouraging right out the gate with silver futures jumping through that $100 mark here. I had made significant calls here, a few hundred of them actually, to a number of dealers out there, coin shops, pawn shops, things like that. And many of the offers that they were giving me was quite insulting. Many of them were 75% a spot, 80% a spot. They'll take where spot is and they'll back $20 off of it. And that's where they're at right there. One thing that I figured out is that the larger the bar, so many people will say, talking about draining the COMEX of all their bars. Well, those bars are 1,000-ounce bars. They're really crudely poured here. They're not pretty to hold whatsoever. And if you went into a shop with one of those, I would guess that they would give you maybe 75% of where the spot is at, because of the fact that they've got to send that off and the market for it is just so small. And what they're figuring out here is that the higher the price goes up, the smaller the market is for larger bars, like 500-ounce bars, 100-ounce bars. So what I was trying to unload was a couple 100-ounce bars here. What I ended up, after about 200 phone calls out there and quite a journey here, was offloading it at about $5 under where the futures was trading at that point in time here. But it wasn't to go to say, it was like literally a scene out of Pawn Stars, with me negotiating back and forth with these people as far as what it was. And they would only take one. And then what ended up happening is that they were able to offload it in an eBay environment, and then they were able to call me up and have to buy the other one from me. So the backdrop is I'm having a new driveway installed, so I was negotiating what a driveway in cash would cost, and that's where things took into play here, where this got my mind going as far as unloading some silver here in the market and seeing where I could do that at. So it was very difficult, like I said, quite discouraging. And that really what they were after was the 1 ounce, the 5 ounce, and even the 10-ounce bars right now are being turned away a bit because of the fact, or they're being haircutted about $5 to $8 an ounce, because of the fact that people are just not willing to part with a 10-ounce bar is going to cost you, just on the futures contract, just using that as a reference point, $1,120. And most people just don't want to spend that much at elevated levels. So bit off topic here. Let's get back into it. The gold market here, 14-day average true range, $115. The pivot point is going to be $49.46, and the key level of trend support is $46.73. The silver, the 14-day average true range, $6.85. That was another reason why they were discouraged. And a lot of these people were telling me the volatility in the market. They believe that we could be at 90 or 130, some of these different dealers out there, by the end of the day because of the volatility. So they're a bit gun shy taking that. One other thing is that the place that I sold it to was taking in so much silver, they were pumping the brakes until they can get some of that offloaded. So that was other part of the experience and some of the insider knowledge that I was gaining here from talking to these different dealers and wholesale buyers and things like that. So the ETF flows here, the ETFs, they increased gold holdings for the 5th straight day. They sold some silver here. So you look at gold, daily percentage gain here, adding on about 124,000 troy ounces, tacking on about 0.1%. Year-to-date ETFs up about 1.5%. 5th straight day of growth here. Total gold ETF by those ETFs rising 1.5% this year to 100.5 million ounces, highest level since August 16th of 2022. So gold's up about 20% this year, tacked on about 3.4% in the previous trading session. It's up about 3.5% as of the start of this overnight session. So you look at silver, well, this is the problem. The year-to-date total ETFs declining 2.8%. ETFs cut another 2.78 million ounces. So what the ETF holdings have not eclipsed the end of the 2025. the year-end rally that we saw on there. So people are just pumping the brakes on it. What I'm also finding is a lot of people are rotating with the gold-silver ratio at 45, 47, 50 to 1. They're swapping out their silver to gold because gold is a lot more liquid than the silver market. And what I also found out was these dealers are willing to take the gold because it takes up just a small amount of area, doesn't weigh a lot. Just a 100-ounce bar is like 6.5 pounds. So it's quite cumbersome to lug it around. So you look at those silver, those flows here, 4 straight day of declines, gold silver ratio 87 to 1. You look at the broader markets here, and I'll get into the backdrop why we took off on the metals markets yesterday, but it's tech is leading the headlines here with the tech sector and the NASDAQ up 236 points, tacking on about 0.9%. The S&P 500 up 0.3% at 70.33. So we're seeing all-time highs on many of these different indices. The Russell 2000 snapping back overnight, up 14, tacking on 0.5% at 26.92. So you look at what's coming out. We're going to have some chip sector heavyweights like Microsoft, Meta, Tesla, all reporting later today. The dollar has stopped its plunge lower, what we saw yesterday, and that was a big driver on the market. So you do have the longest 6-day, it's a 6-day winning streak, the longest winning streak in the S&P 500 in almost 7 months. And then you look at those other markets here. Again, we got the earnings coming out. The economy, it's all about the Fed here later today. They're set to hold rates at 3.5 to 3.75%. Fed President Jerome Powell will be holding, that Fed chairman will be holding that news conference later today. So we'll be paying attention to that. So you look at the likelihood, 2.8% that they cut. We're going to want to check out the March, the May, the June meeting. June's where it's really pricing in about 100% of a cut. The dollar index dropped significantly. So it was President Donald Trump who relaxed his tone on the dollar sell-off, fueling the speculation that the U.S. currency is going to start a longer-term decline. If you look at the dollar, it's been breaking down over the last 4 or 5 sessions. It came quite abruptly and suffered its one-day biggest drop here since last year's tariff round, with Trump saying on Tuesday he didn't think that the currency had weakened excessively. And you saw that really the treasuries pulled back as well, and it boosted what is known as the debasement trade. So that's going to grab a lot of headlines here today. So the dollar is rebounding against most of its peer after yesterday's sell-off. The euro at 120, that's eye-watering up there. WTI crude oil 62.43. So you're getting some of this inflation trade picking up here just a little bit. Then you also get 10-year treasury yields 4.25%, middle of the range here. VIX futures 18.43, back below the 20 line. The Bitcoin futures, that's getting a boost. It just recaptured the 90,000 mark. It has been bearish and bearish trend trade, everything else, and against the dollar index really weakening up significantly with an inverse correlation. My gut instinct is that it would snap back, which many clients that have been working with me have been adding to the Bitcoin market because of the fact that you saw just so many different asset classes really push up to the upside that they would drag this higher here. Not exactly a great process, but it is just something that we should see happen as all assets will ride and the tide is going to lift all boats at the moment here. No guarantees on it. It's just what I'm seeing because we're seeing even agricultural prices start to break out to the upside. But like soybeans and corn and wheat, even sugar futures are lingering on the verge of a breakout at the moment. So you look at some other things here. The S&P gamma exposure is positive, and you go to Europe and Asia, European stocks, they did drop. Now they were dragged down by the luxury handmaker LVMH, and what's really going on there is you're seeing a lack of sales as far as like designer handbags and things like that. People want to own gold and silver and things like that over some of these other luxury goods. And then you go to Asian equities, well, they're set for another record high, supported by the continued rally in tech shares. MSCI Asia Pacific Index gained 1.2%, with TSMC, SK Hynix, and Tencent all giving big boosts here. In Hong Kong, like the regions here, with some inflows because of the dollar weakness. So if you guys got any questions, you want to talk to me about that process on selling the silver and things like that, because I know a lot of people that sack it, they ain't ever sold it here. And a lot of clients, unfortunately, I've done this 25 years, have passed away and they accumulate all this stuff and they've never sold it here, despite some of the price increases, especially like in 2013 when it shot up to, or 2011, 12, when it shot up to $50. I was quite active in the futures market, saw a lot of people make quite a bit of money on the futures contracts here. And then a lot of people were taking delivery of the certificates, which is easy for you to liquidate those 1,000-ounce bars. Well, if you remove it from the exchange, quite difficult. I'm telling you, did not want a 1,000-ounce bar yesterday whatsoever. Nobody wants that at the moment. At least that's my experience. So yours could be different. But if you guys got any questions, shoot an email, info@bluelinefutures.com. Remember, futures and options trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.